Welcome to another episode. My name's Jose Najarro, and today we're gonna do a quick airlines update. So let's get started. Before we begin, all the information that I have here either comes from seekingalpha.com. I use Yahoo Finance as well, which has a lot of different news articles from different news sources, so definitely check that place out, and either the specific airlines investors website. So these are my main sources. Seeking Alpha I'm using to look at estimated revenue and estimated earnings per share for the upcoming year. Don't forget to also subscribe to the channel, and I stream on Twitch and Mixer Mondays and Wednesday. You guys should be seeing the information down here. Jose Najarro Stocks, if you guys are listening to the podcast. I should be on today around 8 or 9 p.m. Eastern time, so feel free to come along. And the final thing is, I did do a previous video on airlines. In my last video, I pretty much took a look at the 6 biggest airlines, and I took a look at their balance sheet, how much debt they have, how much cash they had. So if you guys want to take a look at that video, I would recommend watch this one first, and I would put the link to the other one in the timestamp pinned comment below, so feel free to check that one out too if you want to get more information on the airlines and their balance sheet. On today's episode, what I'm mainly going to talk about is, first, today is Wednesday, April Fool's Day, April 1st. But these stock prices aren't no April Fools. These are the real thing. We see airlines drop pretty big in just today alone. So we're going to talk about the main reason why they drop, and we're also going to talk about some news, some updated news articles, and some future earnings per share and revenue that these companies are expected to make. Alright, so the 3 companies I'm going to take a look at today are going to be United Airlines. If you guys have seen my previous episode on airlines, you would know this is my least favorite airlines. We're going to take a look at Delta Stock, Delta Airlines, and we're also going to take a look at Southwest LUV Stock ticker. So first, let's just start off to see how they did on the day. This was a pretty red day for these airline companies. United Airlines down 18.7% for the day. Delta is down 16.33%, and LUV is down 10.03%. And you can see, right, some companies, like I said, I'm not a huge fan of United Airlines, and that's because they definitely have my least favorite balance sheet of them all. And you can tell investors actually can tell that too, because that's why they have the biggest drop out of all of them. And then LUV has, Southwest has the best balance sheet. Delta's not too far behind, but you can see LUV saw a smaller decline compared to the other two. So United Airlines, if we're just taking a look at January, compared to January, this company has dropped already about 70%, over 70% of its total value. If that's not crazy, then I don't know what is. We're still a little bit higher compared to all-time lows. All-time lows was about $21.28 for United. Right now it's $25.65. Next, let's take a look at Delta. If we take a look at Delta from January, it has dropped 61%, like I mentioned, right? It's a little bit better off than American Airlines, and you see that with this drop here. Its lowest is also similar to American at around $21.35, and right now we're sitting at $23.87. Finally, we have Southwest. Southwest, from its all-time highs before this all happened, is down about 45%. So you can see, right, Southwest has the best balance sheet of them all, and it took the least hit. I mean, it's still about half of its total value, but it took a lot less hit compared to the other airlines. And one of the biggest thing is just it is not as heavily leveraged as the other companies. It's still higher compared to its all-time low. All-time low was on March 19th at around $30.86. Right now it's at $32.04. So it's not that far ahead. All right, now that we took a look at how these companies have reacted to the market, I wanted to take a look at what their expected guidance will be for revenue and earnings per share for the upcoming year of 2020, and I wanted to compare it to 2019. So if you guys saw my previous video, there was one reason I did not do this, is it was still too early, and a lot of analysts has still not projected the new what they would expect. So obviously with a lot more news that we have nowadays, they were able to produce a little bit more numbers, and we have a lot more analysts giving some form of revenue outlook and earnings per share outlook. So I thought it was a good time to talk about it. Like I said, this whole event with the coronavirus is a moving thing, so all of these can continue to change, and if they change drastically, I'll probably do another video with the more updated figures. But now let's take a look at Delta. Delta's revenue for 2019 was $47 billion. For 2020, they are expecting $36.76 billion, which is a little bit over 20% 20% loss compared to the same time last year. Earnings per share for 2019 for Delta was $7.33. They are expecting negative 12 cents for 2020. So you can see that's a huge gap and a huge loss, and this is why these companies are taking a huge hit. And if you guys are wondering where I collected these expected revenues and earnings per share, I use Seeking Alpha for this. You can use other articles, you can use Yahoo Finance. I normally stick with one of them. I like using Seeking Alpha, but Seeking Alpha usually provides a little bit higher than Yahoo Finance. So again, these are just rough estimates, but I really like how Seeking Alpha provides them. Next, we have United Airlines. So United Airlines for 2019 produced $43.2 billion of revenue. For 2020, is expecting 30.9, so about $31 billion. Again, another over 20% loss in revenue. Earnings per share for United Airlines was $11.63. For 2020, they are expecting negative $5. So that's a huge range from 11.63 down to negative 4.95. And just because of that huge range, you can just see there how heavily leveraged this company is. It did extremely well in its good years, and again, when you're leveraged, if things are going good, you're gonna do a lot better. But then we take a look, hey, when you're leveraged and things go bad, things are gonna go south pretty quick. So for 2020, they're expecting almost a $5 loss. The final company we're talking about is Southwest, LUV. They for revenue, which I was pretty surprised on what I'm seeing here. I don't know if analysts have just not updated, but I took a look at Yahoo's as well, and they were kind of similar figures. So I thought this was pretty impressive for Southwest. Southwest in 2019 expected was $22.4 billion of revenue. For 2020, they're expecting 19.49. So that's a little bit over 10%, if that. Yeah, a little bit over 10%. So it's losing a lot less revenue compared to Delta and United Airlines. So again, we can see Southwest took the smallest hit compared to all the other airlines. Earnings per share for Southwest in 2019 was $4.28. And for 2020, they're still expecting to be positive at $1.21. And like I mentioned, right, LUV Southwest has one of the best balance sheets of them all. And you can see right here, even if they're taking this big hit, they're still actually going to be providing some form of profit, which I think is pretty impressive. Again, these are all estimates for 2020, and this is a moving problem, so we can continue to see more updates later on in the future. So the first article comes from Barron's, and it's airline stocks are getting hammered and worse is yet to come. So I highlighted all the important information from this one, and this pretty much talks about why we took such a big hit today. And if you guys were watching the White House conference yesterday, March 31st, you guys know that we're no longer expecting that to open up the business in April 15th. It has been moved into April 30th. Now with that movement, it is also moving air travel and everything. So now Barron's mentions that air travel may be suspended this summer as well. So we're going to see a lot less revenue on airlines this summer. Right, we're already expected to not be open anytime soon until after April. So the full month of April is out the window. But again, this hurts airlines, right? The more time they still have to pay for their planes being parked in whatever airport. They still have to pay employees. They still have to pay maintenance on these, and they're just not collecting revenue. So the more time they are grounded, the more time the more money they're losing. Here they also talk about some analysts and how they're trying to compare what to expect for Q1 and the remaining quarters of the industry. Right now, they're seeing a collapse of about 90% in the second quarter for airlines. They're seeing about a 55% decrease in the third quarter and about a 30% decrease in the fourth quarter when compared to the same time in 2019. But again, this is a moving target, so if things start to get worse, these declines will continue to increase and they will be moved further on in time. So as things continue to get worse, the declines are going to continue to get worse and the time span will continue to get worse. But on a good note, once things go back to normal, these things will continue to pick up again. They do mention here, and I thought it was pretty cool, one way that airlines are able to collect to be able to bring cash to the company is by their mileage programs. A lot of these companies are able to sell miles ahead of time, and then the customer can buy them and use them for future holds. So right now companies are not really doing this, but if there's ever a need for some really strong cash fast, this is one method that they will be able to use. The next article I want to talk about is what the $2 trillion US stimulus package means for travel business, and this was by Skift. Again, I found these on Yahoo Finance, and the most important thing here is they do talk about airlines, and they mention how out of that $2 trillion, $50 billion is meant to go to the United States passenger airlines, and half in grants and another half in loans. And once the airlines accept this money from the government, it'll prevent them from laying off or cutting hours of employees in the front line. So typically flight attendants, pilots, gate and airport agents, and ramp staff, all the way through September. In addition, the law also limits the airlines from purchasing back any shares and also increase the executive compensation, which I think this is pretty good. One thing they don't talk about here is the United States is also seeking into getting some form of collateral for these loans in the form of equity or some other form. That whole equity talk has not really been finalized yet, so that's still a moving target as well. And once we have more information, I'll post an update on that. The next article is American Airlines to apply for $12 billion in coronavirus government assistance. So out of that 50 billion that I just talked about, 12 billion is what American Airlines is gonna ask for. They seem like a little greedy for having a horrible balance sheet. Maybe next time don't over leverage too much, right? So this article comes from Benzinga on March 31st, 2020. And the only other important information that I mentioned here is just to see what other airlines are doing. Delta is suspending its buyback and is deferring 50 million in capital expenditure, as well as halting future dividend payments. Alaska Air has also suspended its dividend program and cut capacity by 70%. So again, this is something that you got that if you are into the airlines for the dividend purposes, expect dividends to be cut, expect dividends to either be cut off completely or just reduced to some very low number, as well as buyback programs are going to be cut down by these companies, and similar is going to happen to the cruise line industry if they haven't done so. And here, it just mentions American Airlines has reduced its flight schedule by approximately 60% for April and reduced it by 80% for May in the record of light record low demand. And even when things get better, right? Once this whole coronavirus goes away, I still think that the customers' reflection are still not going to be as strong as they previously were. I feel like more people are still going to be a little hesitant. It might not be a huge number, but I do think it's important to think in the mentality of the customers. And I personally know some customers that are probably not going to fly for a nice amount of time from now. And the final article comes from Benzinga as well, and they mentioned the article is Airlines, Government, and 3PLs get creative with emergency airlifts. And what this article pretty much talks about is how the airlines are getting a little bit creative in how to get a little bit of money. So Delta Airlines on March 30th, so that was 2 days ago, announced that it has started cargo services between Shanghai and Detroit for 3 times a day to be able to move urgent medical supplies. So obviously they're going to be getting paid for this. It's a smart way to use your planes and also help throughout the crisis. Unfortunately, I'm not sure how much airplanes are needed. We have UPS, we have FedEx, and we have other delivery services. So I wonder if maybe if the demand is just so strong right now that it's pretty good to be able to do this. And US Delta, they did mention that they would increase this frequency if it is needed, to more daily flights, more planes, depending on demand. So again, there are creative ways that airlines can use their planes at the moment. If cargo services has increased, then obviously airlines can even rent out their airplanes to those other companies. Like for example, let's say right now, if FedEx needs more planes, why don't they just rent a plane from Delta or from United? And again, it's a good thing for FedEx because now they don't have to go buy a plane, and they'll just be renting it out for some time. And it's good for Delta as well because it'll be able to collect some revenue. Again, I'm not sure how that's possible, if there's any legal matters around there, but it's just a pretty way these airlines need to get creative to be able to collect more revenue. So that's it, guys. I hope you guys enjoyed this episode. Feel free to post on the comments. And like I said, I did a video on the airlines about a month ago where I took a look at their balance sheet. So the description will be on the pinned comment. So feel free to check that video out. So take care, have a good night, and see you next time.